Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Gowden, jumping into the charts on this Wednesday, September 28th. And what a terrific price action day it is. A huge rally on Wall Street, and this is exactly what we were positioned for. We were closing our shorts over the last 1 to 2 weeks, and we were loading up, accumulating the long positions. And I got a lot of negative feedback from potential investors and other traders saying you're crazy, markets aren't low enough yet. But when you trust the charts and block out other people's opinions, you get rewarded in most situations. And that's certainly what is happening to our accounts once again. So I just want to say congrats. Our swing trading accounts have hit new highs yet again this year, and we're heading into Q4 on a terrific note. Now, if we look at the S&P 500, it's a massive rally, and it's interesting to see if we're going to see a last-minute 10-minute short squeeze. It's certainly shaping up to be that way. Let's just flip to the intraday action to see what is transpiring. So the markets are trying to put in a little bit of a short squeeze at the moment. You can see you had a little bit of resistance here, which you broke out of. And now it'll be interesting to see if we can hold this level. You may get a little bit of a check back before rallying up to this gap fill over here, which I will just put in a trend line. You can see that you have a gap fill right up there. So there is the probabilities that we do fill up this gap. You can see it clearly on the daily chart as well, but it'll be interesting to see if we get this little bit of a squeeze late in the day. It's certainly shaping up that way, and the potential of a short squeeze can happen if a lot of people get a little bit nervous holding into this DXY decline. But overall, why did the markets have such a tremendous, powerful move? If we look at the intraday action, the markets actually gapped lower, tested your double bottom, made a new low once again, and then it just kept rallying. So the interesting thing is that you actually pierced the June low over here, made a bottoming tail right off of that new June low, and you just never looked back. And the news, the kind of the catalyst that spooked these markets to the upside is the fact that the Bank of England, the UK, has now pivoted and they've started buying bonds, which means they're stimulating their economy. So the markets are taking that as kind of a signal that the Fed is likely close to a pivot as well. And due to the fact that the UK government is now pivoting with their monetary policy, because of the fact that major pension funds were going insolvent, they also have the energy crisis, just kind of signifies that we are entering that recession. And it's truly incredible to see that we are positioned extraordinarily long for this rally. Like I said, our accounts are hitting new highs. But overall, the S&P has had a phenomenal move. You can see we clearly had this beautiful surge, a little bit of a consolidation, and we've broken out to the upside yet again. So where do we have short-term resistance? You obviously are going to have resistance at this gap fill, which is slightly higher, around 375. But since the markets and the DXY as well has pulled back substantially, and yields, if we get a positive close, which is looking very likely, it does dictate that we could potentially at least float back up to this 381 mark over the coming weeks. So that's kind of my expectations. But remember, this is a bear market. Yes, the market is sensing a pivot, which arguably is great since yields are dropping. But in reality, let's just say the Fed comes out and says they're not pivoting. When you have the UK pivoting and starting to stimulate, and if the Federal Reserve stays aggressive, that means that the UK is devaluing their pound even more. So that being said, we don't know if the Fed is pivoting. The bond market is kind of front-running that pivot. Generally, the bond market is right, but let's just work out the two different scenarios. If the Fed pivots, yes, that means that the markets will likely get a rally, which that rally I will love to have because it will allow us to continue to short. Just because the Fed pauses or pivots doesn't mean this market is going to new all-time highs. We're certainly far beyond that point. The reason for a pivot would mean that a nasty recession is on the horizon, and that's the new catalyst that would take this market lower after we get a substantial bounce. So there's lots to continue to consider, but we are long. We close a bunch of winners today and a bunch of day trade winners today, but overall, look at this nasty pullback in the dollar, down 1.28%. And the beautiful thing is if we flip to our monthly chart, we were actually telegraphing this. major pivot high, and look what you just tagged last night. I can actually adjust that slightly so you're connecting your pivot to your pivot and to your pivot, and you've pulled off of that level substantially. So that is certainly healthy to see, that the US dollar's pulling back. If we also take a look at all types of the yields, so starting off with the US 2-year yield, nasty decline. It'll be interesting to see how this week closes because you're getting a little bit of reversal signals, but nasty decline in yields. Even though you still had this massive move up, yields are still historically elevated compared to where the debt levels are and valuations are. So these markets aren't out of trouble yet, but it's certainly a good sign to start seeing yields pull back considering we are net long. Look at this nasty bearish engulfing candle on the 10-year. If that doesn't imply more downside in yields, I don't know what does. And honestly, it certainly comes on the back. If we get a weekly reversal signal like this, you could get a retrace up and then an eventual collapse. But needless to say, the likelihood of a potential top is certainly playing out in yields. I do think that there is a chance that inflation could come in waves where we see a little bit of a deflationary period with an uptick again in inflation, kind of like the 70s. But overall, in the near term, I do think that yields have put in that definitive top just due to this bearish engulfing nature. So again, that is healthy to see. If we take a look at oil has had a substantial rally as well. It's beautiful to see because we are along the UCO, which is the double leveraged oil play. So that is extremely healthy. Where do I see resistance on oil? This down sloping trend line. I do think that oil can have a chance of coming up into this trend line over the next few trading sessions, but then it would likely pull back and have to consolidate underneath it before breaking through that. So up until that point, I'm probably going to be looking to offload our UCO as soon as we hit this downsloping trend line. That's kind of my expectations for the trade. If we look at natural gas is getting a little bit of a bounce. You did hit that first support level. I would have liked to tag this second downside level over here to consider going long, but needless to say, some accumulation in natural gas longs is occurring because you have this beautiful bottoming tail, which you made a new low but reversed off of that level as well. Let's just jump back to the S&P 500 so we can continue to watch and see how the price action is shaping up. So it's pretty much just ending where we last looked. If we take a look at the QQQ, the QQQ was a little bit weak today just due to the fact that Apple saw significant downside early on. But the QQQ did fill this technical gap. It did not test the double bottom, which is certainly interesting. And it does show that the big cap tech is still the likely market leaders willing to take this market higher. So let's just pull up the Apple chart to see what transpired. So even though the markets are up, Apple is still down. That's a very rare phenomenon to see. Apple's still down 1% on the day, but it was down 4%. You can see this nasty sell-off, but a beautiful bottoming tail on Apple. That does signify the probabilities of the NASDAQ and the QQQs floating up in the near term, at least finding resistance at this 155 mark over the coming sessions. So lots to digest there. I think the big talking point is gold. Clearly gold is a massive beneficiary of the dollar falling back up over 1.98%, almost 2% up on the day. What a beautiful reversal on gold. This is why we're long miners. This is why we're long the GDX. This is why we're long silver. You know, look at this beautiful 6.8% on GDX. Newmont had a fantastic move, up over 4.61%. So we're still slightly out of the money, but if you can break out of this downsloping channel, Newmont has a substantial amount of upside. Even if we look at silver, what a fantastic silver trade that we are making here. So silver's up 3% on the day, a beautiful reversal signal over here, and now you're putting in this potential bottoming formation, this inverse head and shoulders, which shows massive accumulation happening. If we break out of this neckline, there's tons of upside for silver, which would help our Pan American silver play. You know, I still think Pan American silver comes up to this $20.85 mark, which honestly would be a massive gain for us, you know, in and around the amount of 32%. But let's just remember that this is still technically a bear market, even with a potential pause by the Fed. Nothing is guaranteed or set in stone. These markets, can certainly see downside if there's recessionary fears creep in, or if some sort of a default or catalyst creeps in. The interesting price action on Bitcoin, it wasn't really that strong today despite being up, just up over 2.45%. I would have expected Bitcoin to recapture this 2017 high. Now, that's kind of what is, as a trader, I'm a little bit concerned. Maybe it's just due to the fact that crypto has seen so much pain and there's a lot of people skeptical about entering the crypto space. But needless to say, Bitcoin's price action is not really that powerful, considering this asset generally has a little bit more alpha behind it. So we're just going to have to continue to monitor that as we go. Let's just take a look at the SPY. They are kind of selling off late in the day here. Interesting thing though, you did close right at support, so you got that initial check back when you breaked out and confirmed, which on a technical basis, that's exactly what you want to see. Pivot to pivot, check back, and now you want to see this level hold. If this level holds, then you can get a powerful move likely tomorrow to the upside to fill this technical daily gap. The IWM is interesting and intriguing as well, because the IWM did fill its technical gap to the upside. You can see it's pulled off of the highs, but needless to say, a strong, powerful move up over 3.17% in the Russell, which is showing certainly a powerful signal for the overall markets due to the small caps leading this market higher. Whenever the small caps lead this market higher, it means that the likely scenario of upside is very, very probable and likely to continue to see it. So wonderful job on the trades that we did today. Banked tons and tons of profits. It was one of my most profitable days again, and certainly it's a pleasure to see our swing trading accounts reaching new highs as the markets continue to see a lot of devastation across bonds and things like that. But overall, bonds are looking to catch a bid today, which is healthy for our UBT play. You can see something like UBT. Let me just retype that in. So UBT caught a beautiful bid over here. It would have been nice to pick the low and add to our bottom. Needless to say, we did add here at 25.94, which broadened our average significantly. But you can see how oversold. Let me just flip to the weekly chart and look at this beautiful sell-off in the bonds. So the fact that we are trading, our average on the UBT is below the major harsh sell-off, arguably the hardest sell-off that bonds have seen, is certainly a bullish factor. And one of the reasons I'm so optimistic on bonds and why I think we can make a substantial amount of profit is I think we can retrace back to this breakdown zone in bonds, and then we may see a bounce in yields, which would imply that if we get a retrace back to this breakdown zone, that would imply upwards of 40% gain for our UBT play. So that is a substantial amount of upside that we could see, and that's certainly very, very possible in these market conditions, especially if the Fed does do somewhat of a pause. Now it'll be interesting to see because we don't have an October FOMC meeting. The next meeting is at the beginning of November, so there's about a month potential rally that these markets could see before the Fed either jawbones back down or really lights a fire into these markets by fueling the Fed pivot or Fed pause. So needless to say, if you look at historical cycles, just because the Fed pivots or pauses doesn't mean the markets are going to rally up to new highs. Generally, the markets do catch a little bit of a bounce, especially coming from an oversold condition. But typically, the markets do trend lower because it means market participants are pricing in a recession. And if yields start collapsing past certain levels, I will be looking to fade this market and pile on the shorts, because generally the bond market has a very successful track record at foreshadowing a potential collapse in the equities. So congratulations on our trades. Again, trusting the charts, trusting the technical levels, identifying that the dollar was extremely overbought on all time frames, that yields were overbought on all time frames. This is why I was accumulating so many longs, and I've basically never been this long in my life, and it's certainly paying off today. Now, if these markets start rallying over the next 1 to 5 days, we will be looking to offload into the strength of the market. That's how we have been profiting this year. And we're not here to stick around in this market. A lot of people think that this bear market is over just because the UK is pivoting. The Fed hasn't announced a pivot yet, but Generally, like I said, the pivot does not mean that we're not going to make lower lows in this market, especially when inflation is still high. So just keep that in mind. We still have the inflation bug and arguably stagflation that is likely coming around the corner to hit these markets. So let's just do one final check of the SPY. So in the after hours, the SPY is coming in a little bit, but needless to say, it's still holding a pretty substantial amount of gain. The volume on the S&P 500 was 84 million, so it was a decent amount of volume today that was traded. It was just slightly below the average volume for the last 25 days, but still a healthy amount of volume to see in these markets. So that's it for today's video. Please give this video a big like down below.